Financial and cryptocurrency markets currently look as if they've run out of oxygen for several weeks in a row. Pressure, uncertainty, sluggish movement, and a lack of a clear trend. Investors are tired of waiting, traders are losing patience, and the market seems stuck between fear and hope. And it's precisely at moments like these that it often feels as though nothing will change anymore. That what lies ahead is either prolonged stagnation or another leg down. But the market rarely lives by such simple scenarios, because over the past week alone, several events have occurred that have begun to quietly but very materially shift the balance of power. Let's break down what is happening right now and what risks and opportunities are forming at this very moment. We'll look not only at the technical picture of key assets, but also at the events that stand behind price movements. The main news of recent weeks is the escalation of the situation around Venezuela and Iran. Political instability in Venezuela, talks of a redistribution of power, sanctions pressure, as well as growing protests and strikes in Iran, including in the oil and gas sector. These events coincided in time and created a powerful news backdrop specifically for commodity markets. Above all, for the oil market. Why this matters? Both Venezuela and Iran, despite sanctions, remain significant players in the oil market. These are volumes that cannot simply be erased from the supply and demand balance. And now, a key question arises. What will happen to this supply going forward? In Iran, news is already emerging about large-scale strikes by oil and gas workers. If exports begin to decline, the market will feel it very quickly, and then a chain reaction is triggered. When supply leaves the market, it becomes tight. Demand starts to catch up and then exceeds supply, and this almost inevitably leads to rising prices. We are already seeing the first signals. Brent crude at the beginning of the week is trading around $63 to $64 per barrel. Rising oil prices are not just a story about commodities. They are a potential trigger for global inflation growth, and inflation directly affects financial markets. Over recent years, you have all seen very clearly how sensitive markets are to interest rates and the rhetoric of central banks. We have already been through a similar scenario. First, oil prices rise. Then comes a global wave of inflation. After that, central banks, including the Federal Reserve, begin raising rates to contain that inflation. And in such periods, markets feel, to put it mildly, uncomfortable. Right now, the situation looks like this. Talking about a new cycle of rate hikes is most likely premature, but there is a high probability that the Fed may slow down rate cuts. And even a pause in monetary easing is already a negative signal for markets. And it's important to understand that the market prices in such expectations in advance, even before official decisions. There's another interesting nuance related to Iran and Venezuela. These are countries that, due to sanctions, have actively used cryptocurrencies for international settlements. If exports from these countries decline, some of the demand for cryptocurrencies from such participants may temporarily disappear. This is not a key factor, but it is capable of creating additional pressure on the market. Now let's move on to the technicals and look at the situation on the Bitcoin chart. In the first half of January, Bitcoin spent many days in a sideways consolidation ring, where the market lacked a clear trend and active movement, and participants patiently waited for developments in macroeconomics and geopolitics. Around the $90,000 level, it is clear that the price repeatedly found support and failed to break down convincingly. This level acts as an important support zone, around which a lot of buying interest and liquidity are concentrated. However, the situation in the market has changed noticeably over the past few days. Bitcoin managed to break through key resistance around $95,000 and move above the range in which it had been stuck for several weeks. The price is now trading around $97,000, and this is already a fundamentally different market context. It's important to understand that a breakout by itself is not yet a guarantee of the start of sustainable growth. The key question right now is whether the market can hold above 95,000. This level is turning from resistance into support, and it is around this area that the main battle will unfold in the coming days. At the current stage, several scenarios can be considered. The first, base and healthiest scenario is consolidation above $95,000. In that case, the market may move into a phase of moderate continuation of growth with targets around 100,000 and higher. The logic of action here is as follows: not to chase the price at current highs, but to wait either for a pullback to the 95 to 96,000 zone or for local consolidation, followed by continuation of the move. It is precisely such pullbacks after a breakout that most often provide safer entry points. The second scenario is a false breakout. If the price quickly returns back below 95,000 and begins to consolidate there, this will be a signal that the market is not yet ready for sustainable growth. In this case, there is a high probability of a return to the previous range and a retest of lower levels. The third scenario is overheating yield without pullbacks. Sometimes the market, after exiting a range, continues to rise on emotions, liquidations, and a flow of late buyers. Overall, the current situation suggests that the balance of power is beginning to shift toward buyers, but the market still remains sensitive to news, macroeconomics, and investor sentiment. Therefore, it is especially important right now not to trade on emotions, but to work from levels and scenarios rather than from expectations of rapid continuation of growth. And if you want to dive deeper into how to correctly work with indicators, specifically in such market moments, when the price exits a range, breaks key levels, and begins to form a new move, be sure to check out our YouTube channel. There we analyze in detail which indicators really help in making decisions. If you want not just to observe the market, but to understand what is happening and how to make money from it with a clear head, our channel will be a good point of support for you. If, on the other hand, you don't want to work in this type of market structure, it's worth paying attention to Solana. The project maintains a long-term uptrend and remains one of the leaders in terms of investor interest. After an impulsive rise, the price is correcting, but the structure has not yet broken. It makes sense to consider buys as the price approaches the lower boundary of the ascending channel, approximately in the $140 to $145 area. This level continues to act as a support zone and looks interesting for trading in the direction of trend continuation. In the end, we see a market that is beginning to gradually emerge from waiting mode, but the key events still lie ahead. The publication of US inflation data. If the figures turn out worse than expected, the downside reaction in cryptocurrencies could be quite sharp. If inflation continues to slow, the market will receive a new impulse for growth because the Fed will have room to cut rates. The main advice right now is not to rush and not to trade on emotions. After breakouts and impulses, the market almost always provides an opportunity to enter more carefully, and it is precisely patience during such periods that provides an advantage. The second important point is to work from levels, not from expectations. Even a strong market needs corrections, and it is they that allow you to assess where real demand actually exists and where the movement is being held up only by inertia. If you act calmly, follow risk management, and don't try to capture the entire move at once. The current phase of the market can become a good opportunity rather than a source of unnecessary mistakes. Stay tuned to the news. We will regularly come out with market updates, analyze the situation, and share our perspective and recommendations.